Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the half-year performance review of both local and international equity markets, and it has been somewhat of a divergent performance. Perhaps local investors treating the local market a bit harshly in terms of their stock price responses relative to financial earnings. But let's take a look at how those both regional markets would have fared and what investors might expect in the coming months ahead. Turning firstly to those local markets and local indices, well, the Trinidad and Tobago Composite Index, which combines both our homegrown or locally grown companies as well as cross-listed companies, would have declined just about 8.7% at the halfway mark of 2023. Our local companies, as measured by the All-TNT Index, were down just about 6.9%. The cross-listed index, a more pronounced 15.2% decline, certainly some big names having a very meaningful impact on the direction of equity markets. And that Caribbean exchange, which would have been launched by the TTSE just a couple of months ago, down just around 4.5%, which reflects broader regional performance. When we take a look at some of the major movers on the Trinidad and Tobago Composite Index, we can see that there has been a wide spectrum of performances. On the top side of things, Agostini's Limited was up just about 57%, improving margins, improving revenues, continued acquisition activity, contributing to Agostini's performance. First Caribbean International Bank, or FCIB, CIBC rather, up just under 30%, again, improving earnings and margins, all contributing to some favorable investor response for FCI stock year to date. Prestige Holdings also up 27%. Again, the theme of recovering earnings and revenues certainly evident with Prestige Holdings, LJ Williams B, and NFM or National Flour Mills, rounding out the top five, again with some strong performances, but on the smaller capitalization end of things relative to the overall Trinidad and Tobago Composite Index members. On the other end of the spectrum, we can see a couple of cross-listed names, GMMB Group Limited down just about 30%, TCL down just around 33%, Guardian Holdings Limited down 36%. Certainly that restatement of earnings based on new insurance standards or insurance accounting standards certainly weighing on investors' minds in terms of uncertainty. Its parent company, NCBFG or NCB Financial Group, down 40%, and Whitco, with its continued revenue challenges and earnings challenges, down just around 42%. So focusing on the international markets now, on this, our favorite market, the US market, it was higher at the half-year mark of 2023, up 15.9%, with some of the less favored stocks of the prior year or prior comparable period really leading the index ahead in terms of sector performance. We can see technology stocks up just around 40%, communication services up 35% at the halfway mark, and consumer discretionary stocks, one of the major concerns in 2022 coming into 2023 because of inflationary pressures and its impact on consumers, certainly rebounding quite strongly, up just around 31%. On the other end of the spectrum, healthcare, utilities, and energy, the worst performing sectors on the S&P 500. At international regional level, it was pretty much the same reading across Europe. European stocks up just around 11.8% at the half-year mark, and Latin American stocks up 14.3%. Asia ex-Japan relatively lagging, posting a very modest gain of 1.4% at that half-year mark of 2023, but certainly better news in the first half of 2023 relative to 2022 for international equity investors. So in terms of equity market drivers for the remainder of the year, we see cooling inflation domestically being one of the themes, which may lead to stronger earnings. Speaking of earnings, we have seen so far in terms of earnings releases for the year, broadly resilient earnings, with most companies doing fairly well relative to their comparable prior periods of 2022. The energy sector recovery, which was supposed to influence domestic energy production in terms of volumes of both natural gas and crude oil, that has not yet really materialized. So there is some question mark around that, and that could be overall weighing on investor sentiment, which seems to be quite weak right now, given that correction to energy prices, plus some uncertainties with respect to that production recovery that investors have been craving at the macro level in Trinidad and Tobago. Internationally, we see some of the themes being continued strong corporate earnings throughout 2023, certainly And there have been several upside surprises so far, improving investor confidence, cooling U.S. inflation, while still above the long-term target of the U.S. Federal Reserve of 2%, it is trending in the right direction, and that is being aided by easing supply disruptions as well as moderating commodity prices. So what does that mean for investors and for your portfolio? Well, not too much has changed in terms of at the local level, maintaining a value bias, looking for those stocks which give you better bang for your buck in terms of the dollars, the price that you pay per dollar of earnings generated. You have to continue being selective in terms of your stocks. As we saw earlier, there is a wide divergence in performance, so be very, very astute in terms of what you add to your portfolio. At the same time, you have to have some of those built-in diversification benefits, so don't put all of your money into one particular stock. Maybe a basket of 5 to 7 stocks is recommended, and look for those companies that are continuing with acquisition activity. They have certainly been on the forefront of investors' minds and getting that confidence and growing those earnings inorganically. At the international level, that core satellite strategy remains. We can see the S&P was up just under 16%, but there have been certainly better performance sectors. Look for industry leaders. Stick to the big names with blue chip qualities. Buy quality and not hype. One of the hype investment themes for the year thus far has been artificial intelligence, or AI, and we've seen a lot of money pouring into that. But the measurable outcome in terms of earnings and value creation is still yet to be determined. And of course, think about broad market exposure if you are not sure which particular stocks or sectors you want to be in. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com, or check out our website where all of our research is absolutely free at bourseinvestment.com. And you can catch us in today's business section of the Trinidad and Tobago Guardian newspaper. Well, that's it for this week. Once again, have yourselves a very profitable, safe, and enjoyable week ahead, and we'll see you next time on the Bourse Report.